Hello, everyone. Thank you for joining this webinar on business interruption insurance. My name is Alison Green, and I'm a barrister at 2TG, specialising in insurance and reinsurance law. Before we get started on the content of the webinar, I just want to mention that I'm happy to take questions. Please use the chat function on your computers to pose them. And I'll take some questions at the end of the webinar. Also, there will be slides and some notes which will be sent out to those who have registered a few days after this webinar. So just to remind us all where we're at as far as business interruption insurance is concerned, obviously, there's been a lot of discussion, a lot of disputes regarding business interruption insurance. In the wake of Covid-19, we all know how badly people's lives and livelihoods have been affected. And many businessmen who took out business interruption insurance have laboured under the misconception that they had protection for financial loss, for loss of profits or increased costs of working, and assumed that insurers would respond because their businesses had been either closed or there'd been problems getting access, and in any event they were losing money. But it's not quite so simple as that, as we all know with insurance. The devil is often in the small print, and one's got to look very carefully at the wordings, and there are many different wordings as far as business interruption insurance is concerned. What I want to do in this session is to look at the main sorts of cover of business interruption insurance and some key words one comes across. Have a quick look at defences that some of defences that insurers have been raising. And then finally, look at what the regulator, the Financial Conduct Authority, has been doing and its intervention with a test case. So let's start by looking at the main types of business interruption insurance. And really, they fall into three main types. The first one I'm going to call physical damage business interruption. This is the sort of business interruption insurance that most small and medium-sized enterprises, whether they be companies or firms, take out. And essentially you find it in commercial combined policies or package policies where a business takes out insurance for various risks, whether it be cover for property, their property or employer's liability, or their motor fleet. And usually after the property section, one finds the business interruption section. And for the most part, one comes across this when there's been a physical event such as a fire or a flood. And by reason of that physical event damaging the property, the business has been interrupted, and there's a claim for financial loss, usually loss of profits. So just to look at what the definition of physical damage business interruption insurance is said to be, one's required to find physical loss or physical damage to the insured's property due to an insured event, whether it be fire, flood, or perhaps disease, and interruption to the insured's business as a result of that physical loss or damage. I'm going to come back to that in a few minutes. Just to remind you of the other two main types of business interruption insurance. The second type is called Contingent Business Interruption Insurance, or CBI for short. Again, there's a requirement for physical loss or damage to occur, but this time to others' property. And it has to be due to an insured event, whether it be fire, flood, or earthquake, and interruption to the actual insured's business as a result of that physical loss or damage to the other's property. This is typically taken out by those in a supply chain where they're concerned that their supplier's factory or business might be hit by fire or flood or some disaster, or possibly, again, disease. And they want to make sure that there'll be some recompense for them if their supplies, for example, of components don't arrive on time, so they claim on their business interruption insurance. And the third main type of business interruption insurance I want to mention is what I'm calling non-physical damage business interruption. Here, the insurance basically is covering interruption to the insured's business due to an insured event, again, whether it be fire, flood, possibly disease, or as we'll see, such matters as loss of access to the business may be due to a flood or fire or due to government restrictions. So this third type of business interruption insurance may be a standalone policy, but often you find it as an extension to the previous two policies that I've spoken about, obviously at a premium, an extra premium to pay for that type of extension. Now, I said I'd come back to physical damage and to the policies that so many SMEs have taken out. And the problems that there have been as far as disputes with these policies are concerned is the way that damage may be construed. Of course, it may be actually defined in the policy, which assists in interpreting it. But generally, the way that the courts have interpreted physical damage is as meaning physical change to the insured subject matter itself, to the property itself. Now, there may be possible arguments as to whether one can say that by reason of COVID-19 there's been physical damage. It may be possible, as they are arguing in America typically, that there's enough by way of damage by reason of contamination of the property by a person infected with COVID-19. I have to see how that goes. The more likely assistance is to be had from some cases that have been decided in this country, which have looked at physical damage, unfortunately not in relation to business interruption insurance itself. I just want to mention the first case called the Ordula, which concerned a ship called the Ordula, which was carrying containers which had hydrochloric acid in them. And unfortunately, some of these containers leaked and the acid went onto the deck of the ship. Now, the deck of the ship wasn't damaged in the sense that there was no permanent damage, there was no corrosion by the acid, but it had to be cleaned up. And there were substantial costs involved in cleaning it up. And the case went to court, and although it was a tortious case, involved insurance as well. And Mr. Justice Mance, who dealt with the case, accepted that it could be said that there was physical damage here, even though there wasn't a physical change to the insured subject matter itself. There was temporary contamination by the acid. And another case which may be of assistance to those arguing that there has been physical damage is the case of Blue Circle Industries PLC versus the Ministry of Defence, where unfortunately radioactive material escaped from the Aldermaston institution of the Ministry of Defence. There was some leak into a stream, and some of the radioactivity ended up on land belonging to Blue Circle. The court considered here whether there was physical damage, and it was prepared to accept that there was physical damage to the soil as a result of this contamination that had to be cleaned. And as far as that was concerned, we're dealing with the Nuclear Installations Act, So under that act, it was sufficient as far as physical damage was concerned. But you can see there is quite an uphill struggle for those who have this type of policy. That's the physical damage policy. I want to look next at the policies which do refer to the peril or the event as being a disease. And again, there's a lot of variation in how disease may be expressed in a policy. Unlikely just to say there's cover for disease. Often it says there's cover for infectious and contagious diseases occurring at the premises. And this may be in any of the three types of business interruption insurance I'm talking about, as we'll see for the rest of them too. Matters are a bit easier if the insurance policy actually lists the particular infectious and contagious diseases, because as far as insurers are concerned, they won't be insuring those that weren't listed, particularly bearing in mind that COVID-19 only was known to us for some months, so these older policies wouldn't cover it. A lot of policies do talk about cover for notifiable disease, either occurring at the premises, or in some policies, they talk about cover for notifiable disease within a certain radius of the premises, or within the vicinity of the premises, whether it be within a radius of 1 mile, or sometimes a radius of 25 miles. As far as this sort of wording is concerned, it may be fairly easy to demonstrate that by the end of March, if you've got a policy which says within 25 miles, that there was incidence of COVID-19 within that area. It might be more difficult if you are insuring a remote rural location premises. Now, the date to bear in mind for when COVID-19 became a notifiable disease is the 5th of March this year, when the government added it by statutory instrument to the list of notifiable diseases. Some guidance as to when the trigger date is likely to be construed as being, and I consider it will be construed as being the 5th of March, can be gained from a case that went to the Court of Final Appeal in Hong Kong. And this case is called New World Harbourview Hotel versus ACE and others. In that particular case, New World Harbourview was a hotel group and convention group, which had various hotels and facilities in Hong Kong back in 2003. And unfortunately, early in 2003, Hong Kong was hit by a serious outbreak of SARS. You may remember that disease. And unfortunately for the claimants, they lost a lot of money by way of people not coming to their hotels or using their facilities. They claimed for these losses under their business interruption type insurance that they held with ACE. And there was an argument about when was that policy triggered? Was it triggered when it was decided by ordinance that SARS was a notifiable disease? And the court, which had 5 judges considering this, decided yes, it only became triggered when SARS became a notifiable disease by the Hong Kong ordinance, adding it as a notifiable disease. So the next thing I want to look at is the sort of event or peril of loss of access or closure of business. And again, this comes in a lot of different forms in different business interruption insurance. So it may be that the policy expresses loss of access to business due to disease or notifiable disease. Or it may say was the effect that there's been closure of business due to some sort of state intervention or intervention by public authorities, or however it's expressed. Or alternatively, it may say the peril or the event is loss of access or closure of business due to restrictions imposed by a public authority. So it may take various forms, but again, you've got to look at the words. When it comes to looking at such things as when an insured lost access or the business was closed, look at the relevant times when, for our purposes, the government may have acted to close the businesses. Just by way of example, it was on the 20th of March of this year that the government ordered that restaurants and pubs were to be closed. That's restaurants apart from the takeaway facilities that the restaurants might have. And as far as that's concerned, one could say that the trigger there as to loss of access or closure is from the 20th of March for those purposes. You'll see probably, or seen in the media, that there's a lot of argument by insurers when it comes to restaurants, whether maybe possibilities of their carrying on either doing takeaways or providing cakes or whatever, that it's being argued by insurers that their business has not really been interrupted, but we'll have to see whether that would be accepted or not. But there are arguments that are made about causation as well as about interpretation by insurers in defending these claims. And the sort of thing you should bear in mind is that it's going to be necessary to demonstrate that the trigger for the loss is the occurrence of an insured peril or an insured event, such as a notifiable disease or a public authority imposing restrictions preventing access to premises. And as far as the defence by insurers are concerned, they'll be saying, well, no, it wasn't due to that particular peril or event, it was due to some other cause. And where insurers can point to that other cause being excluded, insurers are likely to sit tight and rely on their exclusion clause. They will also run arguments such as the cause wasn't due to an insured event, but due to the insured's own commercial decision. I want to draw your attention to a case of IFP&C Insurance Limited versus Silversea Cruises, which involved Silversea Cruises, which did a lot of cruises years ago, particularly for Americans who took up a number of their cruises en masse. They'd taken out insurance, which amongst other things, protected them against loss of anticipated income from their cruises in the event that there was terrorist activity or warnings by the State Department, that's the US State Department, about terrorist activities or threatened terrorist activities. Unfortunately, back into, as we know, there was the terrible World Trade Center disaster, and thereafter the US government gave warnings that Americans should not be traveling in the following months that took place, and there were cancellations of bookings and also cancellations of future bookings. And what was argued there by insurers was, well, all right, there was some loss of income, but some of it was due to the cruise company laying by a particular ship in their fleet. And that was their own commercial decision, so they shouldn't be liable for that. So some guidance from that Court of Appeal in that case, which may be of interest. What I want to look at lastly is what the Financial Conduct Authority has been doing as a result of all these calamitous amount of claims in regard to business interruption insurance. Well, first of all, the FSA made it clear that it required insurers to act fairly towards their insureds and pay legitimate claims when they were made. They did put in a letter which they sent out to insurers that they did accept that in a lot of insurance taken out by SMEs, that's business interruption insurance, there may not be recovery by policyholders, and made that clear. But there's still so many disputes, particularly about non-physical business interruption insurance, that's the third type I spoke about, that it decided to take a test case under the Financial Services Market Test Case procedure. And it's done this to seek a declaration from the commercial court as to the interpretation of a representative sample of business interruption wordings. And it is doing that on behalf of policyholders in the sense that it's going to put the arguments that policyholders would make against insurers, and has done this pursuant to a framework agreement with insurers to take this to the court. And it only started proceedings on the 9th of June against 8 insurers. And already it has got an expedited hearing. So it shows how cooperation between insurers and the FCA and the courts can work. And very swiftly, it has got on with a case management conference this week. And the trial is due to start on the 20th of July. So you should be watching how that goes, because although it's obviously going to be of importance to those particular wordings, there will be guidance as to similar wordings, which some of you may be advising upon or have. And so it will assist in trying to bring some more certainty to the very wide range of business interruption wordings that there are. So finally, just a glimpse into the future and what we may see. I consider there'll be many more non-physical type business interruption insurance policies issued. We're already seeing on renewals of business interruption insurance in April that the rates of these policies were increasing. And some insurers have actually inserted exclusions for pandemics like COVID-19. On the other hand, Lloyd's and with some other insurers have sought to develop a new insurance vehicle, which at the moment is called Recovery Re, based on the models of Pool Re and Flood Re, on the basis that, similarly to Flood Re, that where insurers were reluctant to insure certain properties where they were at risk of flooding, the government would be there as a guarantee or insurer of last resort. Similarly, where insurers are reluctant to take on business interruption insurance to a large degree, it would enable the government to be the insurer of last resort. And finally, looking in the future, obviously there's going to be more litigation, there's going to be more work as far as us lawyers, judges, arbitrators and mediators are concerned for years to come. So thank you very much for listening to this webinar.